we will continue with the next speaker on the stage. It's Cerrado Gold. The stage is yours.
Thank you. Thank you. So thank you for taking the time to hear the story today. Cerrado Gold is an advancing gold producer. We also have some development projects in Portugal, which is a polymetallic gold and critical minerals. And longer term, we have a high purity iron ore project in Canada. So why would you want to own Cerrado Gold right now? We have production of about 55,000 ounces a year over the next 4 years, three years in our 43-101 study. However, we are advancing that. We're spending a significant amount of money on exploration this year and next year. We're doing 20,000 meters of exploration currently. We hope to add between 300,000 and 500,000 ounces of gold there. And then next year we're spending to do 50,000 meters of drilling. And we hope to advance the mine life even further, closer to a 10-year mine life on the property. And we're also looking to expand the production. Hopefully we'll go to 70,000 next year, and beyond that closer to 100,000. We are as well underground development at the mine. We have already developed 3 portals. We are at the mine body right now. We'll start mining that in the 4th quarter. We do expect to hit some of the higher grade this quarter. So the 4th quarter will be our strongest quarter in terms of production for the year. As well, we'll set up underground drilling platforms at the mine to be able to finish drilling off the underground deposit. Beyond that, we also have a development asset in Portugal. As I mentioned, this is a VMS deposit on the Iberian Pyrite Belt. We are having 42% gold and silver there, as well as critical minerals including copper, zinc, and tin. And longer term, we have the Mount Sorcier iron ore project. That's a iron ore project in northern Quebec. It has excellent infrastructure that already exists at the project. We would produce about 5 million tons annum of 67% high purity iron from that project, which is in demand in the market, which is growing for high purity iron of about 10% per annum versus regular iron ore about 1%. In terms of the balance sheet, we're well funded. We have about $14.5 million in the bank. We also have cash flow coming from our mine in Argentina, which is in excess of $50 million a year right now for free cash flow. And we are well funded to develop our projects going forward. You can see here at our mine in Argentina, we ramped up production. We purchased the mine in 2020. We immediately ramped up the production to 42,000 the next year and 55 to 60,000 ounces this year. As I mentioned again, with the exploration we're doing and the work in the mine, we're hoping to see that go to 70 plus ounces next year, 70,000 plus ounces next year, and working towards 100,000 ounce production. Even with the acquisition of and the addition of the mine in Portugal, we still remain a precious metal company. 62% using the feasibility study prices, 81% of our production would be precious metals at spot prices. The value proposition we have here for the company is that for a market cap of about 200 million today, we have cash of about 15 million. We have a project in Argentina that shows cash flow at $2,100, which is what the feasibility study was done at. However, our free cash flow from that mine is in excess of $50 million a year currently. We also have the Portugal project, which has an NPV of 146 million, and longer term, the Quebec iron ore project, which has an NPV of 1.6 billion. So a lot of material and a lot of opportunity and value for a very modest share price today. If you like to look at this from an EBITDA or a cash flow perspective, in the next 5 years, we're going to see substantial amounts of cash flow growth. We have, as I mentioned, 44 million of cash flow from the project in Argentina. Again, that was done at the feasibility study price of $2,100. With the gold price today, that's in excess of 100 million of cash flow. Adding on Lagoa Salgada, we would be in excess of 100 million. And again, with today's gold prices, that's in excess of 200 million. But then when we bring on the iron ore project in 2020 or 2030, we see almost $500 million of cash flow per year. So within a 5-year time frame, you see significant cash flow, and we're able to do this with minimal to no dilution for shareholders. If you like to look at this in terms of a gold equivalent basis, we're at 55,000 ounces now. When we bring on the project in Quebec, we would be north of 300,000 ounces of gold equivalent production. This is a year of transition for the company. As I mentioned, we have heap leach and underground production in Argentina. We're doing a 20,000 meter exploration program as well as a 50,000 meters planned for next year, which will expand our resources and our mine life as well as our production. And we also are going to be underground exploration next year as we finish off the drill pods below surface. In terms of free cash flow, again, this would be closer to about 50 million now at today's gold prices. We also, for our project in Portugal, are finishing a feasibility study which will be out next month. We expect our environmental permit by the end of the year, our construction permit in the second quarter, and we would be going into construction in the third quarter of next year with production in the first quarter of 28. The feasibility study shows 75 million a year, but the cash flow with today's metal prices would be in excess of 100. Finally, the Mount Sorcier project, we're doing a bankable feasibility study on that project currently. That will be out in the first quarter of 26. Permitting takes a little bit longer in Canada, so we would be looking at Q3 of 26 to submit the environmental, receive our project financing in the first quarter, construction in the second quarter of 28 with production in 2030. And this is the largest amount of cash flow you would see, free cash flow of $235 million a year, which is for a 21-year mine life. So this is almost like an annuity, it just continues to pay. A little bit further of a deep dive on the project in Argentina. We have the largest land package at 330,000 hectares, which is the size of the state of Rhode Island in the United States. You can see here on the image, all the green area represents our property boundaries. We're in a very good neighborhood. We have great neighbors, Cerro Moro from Pan American, Cerro Vanguardia from Anglo Gold, San Jose, which is Hochschild McEwen, and Cerro Negro, which is Newmont. And so these mines have all been around for about 20 years and have continued to ramp up their production. So what we're doing here is nothing new than what's already been done. As you can see, all of these mines, our neighbors have ramped up their production from as low as 600,000 ounces or 4.5 million ounces up to the 6 million ounce mark for Anglo and Newmont. Pan American right next door to us is ramped up to 1.7 million ounces. We purchased the mine in 2020 and we haven't been able to explore it because in 2020 it was COVID. We were not allowed to have any exploration on site. We could only have the operators. So now we're finally able to get in and start to explore this. But we're not doing anything that's been untested or untried with our neighbors. So we do expect very similar results and we believe that we can ramp up our production and our mine life to similar levels as our neighbors. This is the underground, or the open pit was originally mined by the previous operators. We're mining here in the underground at, just below the open pit surface. But as you can see, the mineralization continues to depth and along strike. And so as we get into the new year, we'll be setting up drill pods and we'll finish drilling that off. That is expected again to add very high grade resources, typically 8 to 12 gram material, which would be fed right into the CIL plant, which would boost production at the mine. Again, on open surface or open pit surface targets, we have a 10-kilometer strike length here. We have 6 targets that we're drilling this year. We've already drilled Reina. We're in Sulfuro East right now. We're actually having very good success, and based on that success, we're actually increasing and adding 3 more drills to the drilling program, as well as certifying the lab and bringing it in on site to increase and improve the results. So we should be able to see by the end of the year proof of concept showing an extended mine life and extended resources, and then next year we should be able to extend that even further to hopefully a 10-year mine life on the property. Just to show you here where we're drilling in the one area, some of the initial hits, a meter at 15 grams, 3 meters at 6 grams, including a meter at 30 grams. So we've had some very good initial results, and we're continuing to drill this down at depth. We also have several other targets on the property. The one area here, Paula Andrea, we had a hole last year which was 122 grams over 20 meters. That's to be explored on later this year. We'll drill down at surface. So we have a lot of opportunity here on the property and we'll continue to drill. Lagoa Salgada, which is our project in Portugal, we own 80% of this project, and when we purchased this, we purchased a company called Ascendant Resources. It added 42% gold and silver, 24% zinc, 14% copper, 5% tin. We like this mine because it's a very low-cost mine, one of the lowest-cost producers in the zinc area. 59 cents a pound for the first 5 years, 79 cents a pound life of mine. And I'll just show you on this cost chart here. This is a cost chart of every zinc producer out there. 79 cents is in the first quartile, 59 cents is at the very bottom. So it's a very low-cost mine. We're fully funded to construction. We have the support of the UK Export Credit Agency with Banco Santander to support 70% of the project cost through low-cost debt. We also have interest from Sprott to take a position, as well as off-takers. So we believe any delta will be covered by the company and will not see any dilution to shareholders to bring this project to fruition and into production. Again, you can see the metal breakdown of the company here. 42% is precious metals, 24% zinc, 15% lead, 14% copper, 5% tin. For 40,000 meters of drilling, we have 7 million tons of resource. So the ratio of drilling to meters hit is very high for this project. Just to give you an example, in Argentina, we're spending 20,000 meters this year, 50,000 meters next year. And if we could get the same ratio in Argentina, we would have gold for years. So it's a very high ratio on the Iberian Pyrite Belts. In terms of growth, you can see here Sandfire is our neighbor down the road. Boliden is also on the Iberian Pyrite Belt. The mineralization occurs in clusters here. We have 2 clusters. We have a 3rd one that we're developing now, but everything is open to depth and along strike. And again, as I mentioned, for 40,000 meters of drilling, we have 14-year mine life on the property. We're working on a 1.5 kilometer strike here, but the entire anomaly on the property is 8 kilometers. So the idea here is let's put this into production, take some of the money from cash flow, and finish developing this project. So it is not unusual for these mines on the Iberian Pyrite Belt to be very long lasting. Sandfire has been around for 20 years, Boliden for over 20 years. Both these projects recently sold for over $6 billion, so very high valuation on these projects. Lastly, we have the Mount Sorcier project in Quebec. The thing that we like about this project, often with iron ore, you have to spend a lot of money building infrastructure, and we're blessed with amazing infrastructure. Our project is located just outside of Chibougamau, but from Chibougamau to the port, there's 370 kilometers of existing rail line with capacity. There's also a port, deep water seaport at the port of Saguenay, which we have access to and have already secured a spot. So the only thing we have to build is a 25-kilometer rail spur to the town of Chibougamau. This is a magnetite deposit, very simple. We mine it, we crush it, we run it over magnets to concentrate it. It's a very simple process. And the thing that we like is the iron ore is here, right under this mountain, so the strip ratio is 0.5 to 1, so very low strip ratio. Looking at the original feasibility, or the PEA study done on it, it was for 5 million tons. Our all-in cost would be 66 if we shipped it to China. However, we're seeing a lot of interest right within North America and Europe for this. So realistically, our all-in cost would be about $45 a ton. Currently, iron ore is going for about $100 a ton for 62% iron ore. 67 would command about a $30 premium on top of that. So $130 with a $45 all-in cost. You see significant margins on that. It's a 21-year mine life and would see significant cash flow for a 21-year period. So again, we'll see our bankable feasibility study coming on that project in the first quarter of next year. Again, we're well funded. We have $14.5 million in the bank. 25 million of free cash flow. Again, that's at $2,100 gold. It's more likely it's about 50 million of free cash flow coming in from the project in Argentina. We have another 5 million owed to us from Hochschild from the sale of an asset, and 10 million coming from Anglo Gold on the option of a property. Just our share structure here for you, and that's all I have. Thank you very much.